So our first speaker is Lawrence Quan. He's the general manager of new markets at Posh. We've had the pleasure of working with Lawrence for probably the past 18 months, and he's worked with a couple of our small credit unions implementing an AI tool. And he's here today to share how you can compete as a small credit union using AI. So Lawrence, I'm going to turn it over to you.
Amazing. Thank you, Dean. Let me just pull up my screen. Let me know if everybody can see it.
Yes.
Fantastic. Fantastic. Well, I'm excited to chat with everybody today. Good morning. I'm Lawrence. I'm our general manager of small credit union programs at Posh. And we've been partnered with the CCUA and really appreciate their leadership in supporting small credit unions with events like this. And I'm really excited to be chatting today. So I'm going to be talking about something that's on everyone's mind, artificial intelligence. For some of you, this might be your first real conversation about AI. For others, maybe your fifth, maybe your 10th or more. But my goal today, we've got a small little intimate group. Let's make the session a little bit more like a round table and a little bit less like just a one-way conversation. So let's jump into it. Let's be honest. AI is everywhere right now. You can't open a newsletter or attend a conference without hearing about it. When I speak with leaders from small credit unions, I'm consistently hearing three questions. Do I really need to care about this yet? What would this look like in our world? And how do I make a smart decision without wasting time, money, or introducing risk? And that's exactly what we're going to start to unpack today. So, how we're going to spend our time, we're going to walk through three big questions that every small credit union should be asking when it comes to AI and artificial intelligence. First, what is AI really? And why does it matter now? What I'm going to do is I'm going to strip back the hype and explain this new world that we find ourselves in. I'm also going to talk specifically about why small credit unions are actually uniquely positioned to benefit in this new world. Second, what does AI actually look like in practice? I'm going to be showing you some real world examples from credit unions like yours that are already using it, plus a live demo of two of our tools. And third, how do you get started in a way that is smart, simple, and low risk? I'm going to share a plan on how to take the first steps and how our partnership with the CCUA is here to help you. So let's start here. When you hear AI, what comes to mind? Feel free to drop it in the chat. I can kind of open that up to see if anybody's got thoughts, any questions. But I've heard everything. I've heard everything from confusing to hyped to robot overlords. So I'm going to take a moment to strip back these buzzwords. At its core, AI is just software that learns patterns and mimics human thinking, but it does it in a way that is faster, more consistent, and at a much larger scale than our brains can. The reality is, all of us are already using AI every single day. When you deposit a check and it validates instantly, that's AI. When your phone organizes photos by the people in your life or your pets, that's also AI. When your email filters out spam or your phone finishes your sentence, of course, that's AI. These aren't super crazy futuristic things. These are things that just work. They make our lives better and they run quietly and reliably in the background. So when we talk about AI in your credit union, what does this even look like? I'd like you to kind of think of three categories. The first is direct member service. So this could look like a member typing a question in on your website and getting an instant helpful answers. These are AI tools that are going to directly interface with your members, allowing them to do things and self-serve. The second is indirect member service, right? So this could be a loan officer finding the right form using an AI tool without putting somebody on hold, right? These are AI tools that help humans better service your members. And then the third is staff enablement and onboarding, right? So this could be like a new employee feeling confident on their first day because they have everything that they need. They have instant access to any question that they could have without needing to ask three people or maybe nervously go knock on their new manager's door. AI really doesn't need to be intimidating. It is not here to replace your team. It's here to unlock their time and potential. These things are real, and many credit unions, just like yours, are using them today. It really doesn't take a massive IT project or trying to set up some 12-month roadmap. These are tools that take 2 days, even less, to implement, and they make the lives of your staff and your members better. Again, they're not flashy robots. These are just useful tools that your team and your members can use every single day. So why does this matter now? Why is this such a hot topic? So let me step back a little bit, right? It's because member expectations are rising. People expect instant answers, smooth online experiences, and 24/7 support from every single business that they interact with in their life. And that includes their credit union. At the same time, switching who you bank with has never been easier. Unfortunately, a frustrating website experience or a long wait on your phone could be all it takes for somebody to start to raise a question of maybe I should look elsewhere. And the reality is that big banks and fintechs are aware of this, and they're investing billions of dollars into artificial intelligence. This is raising the bar for convenience and personalization across the entire industry. So I know this might feel kind of like a David and Goliath situation, but it's really not. There's an opportunity for us to flip the narrative because small credit unions are actually built for AI. If you think about being small, it's not a weakness. In this AI world, it's actually an edge. If you look at our world, right, the tech company world, startups beat tech giants all the time, not because they have more money, but because they're faster, more focused, and closer to their customers. And I hope these things kind of feel a little familiar to you because you know your members. You help their kid get their first car, you run into your members at the grocery store. AI is not here to go replace that relationship. It's here to help you deliver it, even when your team is stretched really thin. Second, you can move faster than your larger peers and competitors. There's not 5 layers of sign off or a 12-month roadmap. Consistently, the small credits that we work with, they can make a decision on Monday and be live by Wednesday. Third, whether your team is 25 people or 5 people, when you have a small but mighty team, every little bit of help matters. And it matters a lot more than if you're 200 or 2,000 people. Adding AI is just like hiring somebody that works 24/7, speaks every language, and knows every answer to every policy, form, question, and they'll never take a sick day. These reasons are why we are consistently seeing small credit unions see the biggest impact from AI tools. So let's talk about this. What does this actually look like? How are small credit unions using these tools today? I want to talk about 2 of our simple but really powerful tools that credit unions are leveraging. At Posh, we have many different tools, but they generally fall into 2 buckets, member-facing AI and employee-facing AI. So let's talk about Posh Answers. This is one of our member-facing AI solutions. It is a website assistant that allows people to chat with and search your website. When a member types in a question, they get an answer instantly. So think of questions like, what's my routing number? How do I apply for a personal loan? Are you closed today? Are you closed on the holidays? Posh Answers reduces the amount of calls from members with these routine basic questions. And Posh Answers also helps credit unions grow their business by getting more people to become members and apply for loans. So that's an example of our member-facing AI solutions. I want to talk about Knowledge Assistant as well, which is for your staff, right? This is an employee-facing AI solution. Your staff can ask a question and get the right answer straight from your documents, policies, and procedures. So for this, imagine questions kind of like, what documents do we need to open a home equity line of credit? Or what is our skip a pay policy? Or where's the fraud escalation process? Knowledge Assistant is effectively a shared brain across your entire organization. It is one that is always up to date and provides real-time information on any question to anybody in the organization, right? So I want to take a second. Think about your own credit union. Is there a question that your team or you answer every single day? The kind of question that you could answer in your sleep. Maybe it's, what's your routing number? How do I reset my password? If any come to mind, I'll give you a couple minutes. Feel free to drop them in the chat. We tend to see the same 5, 10, 15 questions come up. So I'll give a second if anybody does feel like dropping something in the chat. That's fine. We got a bunch of examples, but now I think the thing to imagine is with these tools, all the answers to all of these routine and basic questions are instantly available to your members online, to your staff internally. There's no digging, there's no escalation, there's no bottlenecks, right? So let me actually just bring this to life, right? I've told you about the tools. I personally think it's much more interesting to just show you them. So let me set the stage. I want to first talk about the member and prospective member experience, right? So you're a member, you're trying to consolidate your loans. You head to your credit union's website expecting to find answers, and instead, it feels like walking into a library with no signs. You try a couple clicks, you dig through the menus, you type in a couple search terms, but nothing really helps. One of two things is going to happen. You're either going to give up and go somewhere else, or you're going to pick up the phone and call. Now, let's replay that moment, but this time at Somerville's credit union. Should all be able to see their site now. I've pulled it up. Let me know if you can't. But they're a $50 million CCUA credit union. I'm sure a few of you know Ron. But they're a small and focused team. And let's say that same member, they come to the website and they type in something like loan consolidation. There we go. So what is going to happen is it's going to search their entire website. And instead of a list of links or vague suggestions, all your website visitors will get direct, personalized responses. Here are your options. Here's what you'll need. Here's how you can apply with this big red clicky apply now button, right? It's fast, it's accurate, and it's pulling directly from Somerville's own content, not some generic script. A lot of chatbots are generally built on these scripts that the chatbot just parrots. Posh Answers is actually generating a contextual, personalized answer for every question. So you can imagine it's kind of like having a knowledgeable teammate that is available to your members and prospective members on your website 24/7, guiding them to get the information that they need and also encouraging them to take that next step. Now, let me flip to another scenario. You're somebody that is not a member yet, and you're actually going and you're browsing Chartway Credit Union's website. They are not a small credit union. They are $2 billion. But the same tools that we are using to power small credit unions are the same tools that are powering much, much larger institutions around the nation. So I come to the website. I'm not a member yet, and I'm curious, am I even eligible to join? Without AI, I'm going to go sift through the website, find pages, click around, maybe sift through some fine print. But with Posh, come to the website. Usually motivated web visitors, the first thing that they do is actually go right to the search because they know what they want. This opens Posh Answers, and I type in, am I eligible for membership? Again, what it's going to do is it's going to search the content on the website and provide a clear answer plus a link to apply. Get started, become a member today. It's simple, it's direct, and it turns curiosity into action, right? We want to give immediate information and provide a very easy step for people to take that next step. Posh Answers effectively makes any information on your website one click away, and any critical action like becoming a member or applying for a loan one click away as well. So let me flip the script. I want to talk about the employee-facing tools now. Let's say you're a staff member, or maybe you've just hired me. A member walks in and they ask about sending a wire transfer. It's something I've done before, but maybe it's been a while. Do I take a guess at how to process it? Do I dig through the training materials that I was given? Maybe a PDF? Do I ask them to wait? or if they're on the phone, put them on hold while I go ask somebody that's done this recently or done this before. With Knowledge Assistant, this is something that would be right up on my desktop, and I can ask what details are needed for a wire transfer. Similarly to Posh Answers, but an answer is going to show up right away. It's accurate, it's up to date, and it's pulled directly from your own documentation and procedures. You can see that right here, right? There is a document about wire transfers. It's taken that information, made it readily available. It's also surfaced that document so I can go click in, find any additional information that I would want if I need that, or maybe pull up a relevant form. Maybe somebody comes in and they ask about a loan coupon. And to be honest, I hadn't heard of this. So let me throw it into Knowledge Assistant. I can type in the question, search loan coupon, and again, it's going to look through that information, see what's possible, and I'm instantly going to get the explanation. No guessing, no stress. This is something I can have up on my screen that is almost a superpower because I can always portray confidently that I've got the answers at my fingertips. And that's exactly what this tool does. It helps your team show up to every conversation with confidence because they know that they have this safety net. It cuts down the time that they spend on searching or second guessing. More importantly, it cuts down on mistakes. It is a consistent, reliable tool that always makes sure that people are doing the right actions. And it creates a more consistent, supportive experience for your members, no matter who they talk to in your team. The reality is we're seeing that this team makes teams feel supported. And when that happens, members feel it too. So let me flip back. That's kind of the software demonstration. But these two tools, Posh Answers as member-facing AI and Knowledge Assistant as employee-facing AI, have proudly delivered over 300,000 helpful moments just in the past year. These tools are really transforming how credit unions are serving their members on a daily basis. So I want to go back to talking about Somerville a little bit more in depth, right? They are a small team. They have just 4 full-time employees. And like many of you, they're spending hours answering the same questions again and again. When it came to their website, their members would search, they'd get a list of links, and then they'd give up and just call. It was really burning staff time and also frustrating members. As the CEO, Ron Draper, put it, before Posh, our website was a mile long and an inch deep. Members would search, they'd get lost, and they'd just call us instead. They made the decision to add Posh Answers, and they actually implemented it the next day. It was under 24 hours from the decision to move forward for it to go live on their website. And within days, members started getting instant answers. 23% of members that were using Posh Answers actually took a meaningful next step. They applied for a loan or booked an appointment. Their call volume dropped because people had a way to self-serve on their website, and their member satisfaction went up. They don't have an IT team. They didn't have a 6-month rollout. They were just a small team willing to try something new. And they're actually just getting started with Knowledge Assistant in the next week or two. So we're excited to see what that's able to do for them as well. So what now? I've kind of shown you the tool. I've talked about the context, but all I'm doing is inviting you to start a conversation. We offer free, no pressure consultations where we're going to learn a little bit more about your credit union, show you how AI can work specifically in your environment for your member base and for your team, and figure out if now is even the right time for you. One thing I do want to highlight is thanks to the partnership with the CCUA, there's this springboard in place to help you move forward with confidence. If you are a CCUA member under 300 million in assets, you may be eligible for up to $2,500 a year in funding support. And this is enough to meaningfully offset the cost of getting started. And for some smaller credit unions, cover the cost of Posh Answers entirely. Posh and the CCUA have been working really hard to make AI accessible for credit unions of all sizes and all budgets. So if you're interested in taking that next step or even just have a quick conversation, email us at info@posh.ai, or you can scan this QR code. It's going to bring you to a meeting page, kind of like this that you see here, maybe on your phone, and you can actually just book that time directly. But with that, I want to just kind of wrap up and revisit these three questions we talked about at the start. Do small credit unions really need to care about AI yet? Yeah. And it's not because it's trendy, it's because it is finally practical. And those that are acting early are seeing the biggest gains. The second, what does it look like in your world? It looks like faster answers, a more confident team, a smoother experience for your members. And through that consultation, we're always happy to show you exactly what it looks like with some of your policies or some of your website content. Lastly, how do you make a smart decision about it? Well, you don't go at it alone. You start small, you start with the right partner, and look for the right support. And through this partnership with the CCUA, you really do have a springboard to take that first step. The future of credit unions shouldn't just be built by the biggest institutions with the biggest budgets buying the most complex AI tools. It's going to be built by small teams who care deeply, move quickly, and use the right tools. And we're here with the CCUA to help you do that. So thank you for letting me join today. Thank you again to the CCUA for making this opportunity possible. If there's any questions, any thoughts, I'd be happy to answer them.
If anyone has any questions for Lawrence, you can put them in the chat, or you can unmute yourself and ask him directly. But while you're thinking of your questions, I wanted to thank Lawrence for not only presenting today, but highlighting the fact that we do have what we now refer to as our impact grant, which is available to all credit unions $300 million and under. And that is for technology assistance. So if you're looking to learn more about the impact grant, how to apply for it, please feel free to reach out to me. The information is also on our website at ccua.org. I do want to thank you for coming on and presenting that useful information, highlighting the fact that you don't need to be the biggest and largest credit union in the country to utilize AI, and how it's helped out some of our smaller credit unions, just lightening the burden of answering those basic questions that people would call and pick up the phone and ask, what are your hours? What do I need to do to make a wire transfer? So I do appreciate that. If anyone comes up with any questions after this, while you're listening to the recording, feel free to reach out to me if you don't have Lawrence's contact information, and I'm happy to put you in touch. So again, thank you, Lawrence. Appreciate your time this morning, and I appreciate your partnership. Our next speaker is going to be Bryce Jackson, who is the Director of Sales with MemberClose, and he's going to give a quick highlight of MemberClose services and our new partnership with GUI Mortgage. Bryce, the floor is yours. Let me know if you're having any issues with screen sharing.
Dean, thank you very much.
All right.
Everybody see my screen?
Looks good, Bryce.
Hopefully it says MemberClose, your trusted financial services partner.
Yep, you're on.
Awesome. Good morning, everybody. Appreciate the opportunity. Lawrence, thank you very much for that presentation. Always interested in learning more about AI and the capabilities that it has globally, as well as how it impacts and helps our credit unions grow and remain technologically savvy. Along with me today are my colleagues, Bryant Ottaviano, the CEO of MemberClose, as well as Dave Mateka, the CIO of MemberClose. MemberClose, for those of you who are aware, is a subsidiary of the Cooperative Credit Union Association. We've been in business since 2004. We have originated as a settlement services provider for credit unions to remain competitive within the mortgage lending environment. Since its inception in 2004, MemberClose has remained a settlement service provider, and we have also grown. And in 2021, we created a partnership with Pivot Lending Group, and most recently, we've added GUI Mortgage LLC to our MemberClose umbrella to be able to offer you a full service real estate lending solution. Most importantly is we want to meet you where you're at. So that opportunity can be uncovered in conversations that we have with you, looking to meet you where you're at and be able to assist you in adding those solutions to make it impactful for your members. Today, I want to talk about, does everybody see my screen still? Sorry.
We can still see your screen.
Yes, sir.
Okay. So what does it mean to be a full service real estate lending solution? That is first mortgage origination, that's second mortgage processing, that is the ability to subservice as well as provide opportunities like loan participation. Whether it's a one-off loan, you're looking to sell, you're looking and have liquidity, the potential is there to be able to offer those solutions to you. Today, and what we're seeing in 2025 is consistently, a higher rate environment on the first mortgage origination. Question always is going to be, when's that going to change? How drastically will it change? What are the economic impacts to be able to make that happen? All great questions. I would look at, we continue to partner. We continue to identify those solutions and those opportunities that are going to keep your members within your walls. Most recently in the first quarter of 2024, and I will turn it over to Bryant here shortly to give an economic environment and overview of the mortgage environment. But we've really focused in on two opportunities that we've seen grow within the real estate origination market. One is the addition of the age-old attorney opinion letter and adding that to the title solutions options that we have. So if you're a user of the platform, you may be aware of our EquiPro protection program or our Property Report Plus. Oftentimes you can add those type of title solutions to your platform. We are looking at, in addition to, full Alta title policies that originate with first mortgage originations, is making and bringing back the awareness of attorney opinion letters. Secondly, on the valuation front, we have seen that in 2025, there are some changes coming down the pipeline through the GSEs that are going to impact the way valuations work, the way that the current status of appraisers and appraisals across the U.S. is going to be impacted in creating an efficiency for first origination value waivers through Freddie Mac and Fannie Mae that can provide savings as far as reevaluating properties and moving forward. With those, I will turn it over to Ottaviano, the CEO of MemberClose, to jump into deeper depth.
Good morning. Thank you all for coming. As far as mortgage interest rates, I don't want to spend a ton of time. Everyone with an opinion has a general idea what rates are going to do here over the next year. I've been wrong. I think I'm 0 for 29 over the last 3 years as far as calling for lower interest rates. I think reality, and just to break it up as simply as possible, the former administration, I think, was looking to prop up the economy to prevent a recession simply because of the timing. Biden would not have been able to allow for a recession that close to the presidential election, and ability to be able to drive dollars into the economy to help prop up the economy. I think is exactly what took place there over the last year, 18 months. Trump having no ability to run for a third term legally, so we know of yet, has all the time in the world to create a recession. And I do believe that the Trump administration is looking to drive a recession, create a black swan event with the layoffs, with the hiring freezes within the federal government. I think that will be sufficient enough to drive employment, unemployment negative, and create a lower interest rate environment. Recessions, last recession, full recession we had was 2008. So it's been a while. And in between those recessions, obviously asset bubbles build. And concept is to pop those bubbles before they get too large. So just my opinion, try to keep as all political rhetoric in every way, shape, or form out of it. Just kind of looking at it from the standpoint of what a debt market trade would look like. If you have any questions on market, we'll send you out a magic 8-ball. You can shake that, ask that any question you want. It'll be as accurate as anybody else you'll talk to as far as mortgage rates are concerned. Let's talk about Versatitle. And as Bryce had mentioned, it's an age-old process being rekindled by a partner of ours. We went on an attack last year of how to create the lowest cost available, because I do believe in 2025 refinance transactions to some degree will come back. So we as credit union mortgage providers need to be prepared for that. We will see an increase in volume, I think, just out of pure exhaustion, credit exhaustion from the consumer side of things. The 2.75, 3.25 will probably look to be extinguished this year because of all the other higher consumer debt that folks have acquired. To create that, we tackled two components, title and appraisal, and we actually didn't tackle appraisal. Fannie Mae and Freddie Mac did, and we'll touch on that here secondarily. So we've named this a Versatitle, and it's available as a purchase or refinance transaction. It's for homeowner, lender, investor, and one flat fee. And it's accepted by Fannie Mae, Freddie Mac, VA, and FHA. The kind of the acceptance of the AOL is it's fully insured and compliant with the GSE guideline, which it always has been. It just kind of got knocked down secondary to Alta title insurance. And we're trying to bring it back for a couple of different reasons. And you should see here shortly through the presentation why we're trying to bring this back. It is important to note, Federal Home Loan Bank, any investors that you may sell on a broker correspondent, there's 90% approval throughout the industry to accept Versatitle. That to me is a key component. Years in the past, it was only very specific. It was very rare that we would see an investor that would allow for this type of title insurance. Next slide, please, Bryce. So here is the side-by-side comparison, and I'm going to zoom in on mine. Give me 1 second. Okay, as discussed, purchase, refinance transactions, lender, homeowner, investor, nationwide flat fee coverage, buyback coverage, secondary market transactions, low-cost coverage aligned with risk, simple, reliable claims process, full purchase price, loan amount as far as coverages, life of loan, insurance carriers are rated A, protection against borrower fraud. So basically all the things that you would see as it relates to title insurance on what it is. And by a show of hands here, how many people have actually personally, forget on the business side, how many folks on the call have personally had a title insurance claim against your title insurance? And I'm going to take an assumption here that 0 people on the call have actually had a title claim. They're very rare. And I think one of the reasons why Fannie Mae and Freddie Mac have looked for alternatives here is because of how rare. It's the most expensive component tied into a transaction. And it's an insurance policy that very few people, A, even know exists, but more importantly, B, have never had a claim on. Now, with that said, if you have a claim, you're certainly going to want to have had title insurance, no question, because they have a tendency to be fairly large when a claim does come down the pike. So, next screen, Bryce. And here is the most important slide for this presentation. We took a This is an actual sale in the state of Massachusetts. It is a purchase transaction that took place approximately 2 weeks ago. We tallied up the entirety of the title insurance from the CD for both buyer and seller. You can see all of the different fees. The math is correct. I can assure you that we double checked it, added it up a couple of different times to make sure. And it's about $4,000. 2,000 each, 2,000 from the seller, 2,000 from the buyer. This is pretty typical. If you close mortgage loans, be it piggyback second mortgages, be it first mortgages, you'll have seen all these fees on the left hand side of this will resonate with you. You'll have seen them before. You'll understand what they are. We did a side-by-side comparison with the versatile product that MemberClose is offering. And again, we totaled all these up, double checked. This one was a little easier to double check. There's fewer numbers and much less to the tune of about $2,000 less on this transaction. Now, what I really liked about this transaction, if you notice, there's a loan amount of $233 with a sale amount of $228. So just off the top of the head, anybody have any idea what type of loan this would be, where your loan amount is actually more than the sale price? Down payment assistance, a first-time home buyer type product. So we have a buyer here that really needed assistance, could have used this additional $2,000 as far as savings is concerned. It comes directly out of their closing costs. It comes directly as it hits directly as a savings to their pocketbook. It's lesser dollars that they have to use from the concession. It's lesser dollars that they have to use from the grant funds that were put into play to help these folks buy a home, buy what appears to be their first home. Substantial savings here that was lost, unfortunately, as far as this transaction. But moving forward, having this accessibility, that extra $2,000 in cash, it may not have put them into a $240,000 house as far as down payment and offset, but it certainly was going to give them a little bit of relief at the closing on this transaction. So really proud to be able to present this and get this out in front of credit unions. It's a game changer in my mind for additional volume. I saw a couple questions that came through. We can take a quick second now to answer those questions or comments.
So one of the questions that came through, Bryant, was, does AOL Pro include owner's policy for purchases, FHA?
Yes. Yes, it does. Think title insurance, think second mortgages, think FHA, think government, think USDA, think conventional. The one product I would suggest that would not correlate here would be jumbo transactions. And only because a jumbo transaction has very unique properties based on the end investor that is looking to acquire the loan. So if it's a Chase product, Chase may not accept this on jumbo products. So outside of jumbo loans, I think any conforming loan that you have accessibility to is a win in this scenario. The other interesting part, and we didn't touch on this, the attorney opinion letter, which again has been around longer than title insurance. I think it's important to note this is the more expensive of the two categories that we now offer. The other category is called a cascade. And as far as a portfolio mortgage is concerned, the cascade option is not something that you are going to want to try and tag to a secondary market sellable mortgage loan. A cascade would be more for a rate and term refinance of an existing portfolio mortgage that you already have. So, they have a loan at 6%. They would like to refinance it. Credit union decides to do a streamline refinance. We can facilitate a cascade, title, insurance, and the cost on that would probably be less than $1,000 all in for a cascade title product. And the concept behind it is we already know the member, we already know the property, we already know what the lien position looks like. Let's not go back 375 years as far as paying for an insurance policy. Let's utilize what we've had up until 10 years ago and then look at title for the last 10 years. So it's a capacity and ability to really share some savings with your members because we know who they are. We know where they've been, we know what they're up to. We've seen the property, we've seen the mortgage liens, we've seen their debt structure. So it just makes it a simpler, easier process for them to be able to acquire a refinance transaction. Cash out, obviously a little bit more risk on a cash out transaction. So maybe it's still a cascade if it's a portfolio loan. But as a very good savings here, the link, the versatile AOL product would definitely get done for a much cheaper alternative. Any other questions on the versatile?
If anyone has questions, you can put them in the chat or you can unmute yourself.
Okay, Bryce, we'll circle back at the end after I talk about hybrid appraisals very quickly. I'm not going to spend a ton of time on hybrid appraisals. It is something, so I've been in lending in some form or fashion for 30 plus years, and most everything, and I enjoyed Lawrence's presentation because AI is infiltrating everything. We may not even know how much AI is infiltrating our day to day. Became kind of an eye opener for me on a presentation that we had with an appraisal management company called Class, who also has a division called Class Union, which is specific for credit unions as far as appraisals are concerned. Fannie Mae and Freddie Mac during the COVID pandemic, they started taking a look at appraisals, and for years we've seen PIWs, or we've all run findings with our fingers crossed, praying for a property inspection waiver. We had a purchase transaction for just the timing of it in a lot of cases. In other cases, it was the expense. I remember very clearly appraisals for many, many years, $295. It was just south of $300 for decades. 2008 came, appraisal management companies came, we went to 500, 600, 700, and it's about $800 now for an appraisal. And it's, I feel like it's very similar to anything else that you have to have, like insurance. You have to pay it because you need it, but what are you really getting for it? As far as the expense of be it house or auto. So Fannie Mae and Freddie Mac during the COVID pandemic came around and said, we've got a ton of data as it relates to information regarding the home. We have all the property information, we have all the county information, everything's at our fingertips. Accessibility to pictures with Zillow and Redfin and Realtor.com. Everything started to become more and more available. So Fannie went out and attempted to create an alternative to appraisals. And again, the Appraisal Modernization Act, or Appraisal Modernization Regulation that Fannie Mae and Freddie are taking advantage of, turn times. We've all experienced extended turn times. If you do not live in a populous area, sometimes an appraisal can take weeks, and 3 times the cost of a normal appraisal. By a show of hands, how many here has ordered an appraisal and had the appraiser go cold? Back in 2020, 21, we would actually order appraisals. The appraiser would go to the property, inspect said a property, and then we would never hear from them again. And they weren't paid. It's not as if they were absconding with money. They just had too many deals and had to make decisions that I'm not going to do this. I'm just not going to finish this transaction. And when you're 3 days before a purchase closing with no appraisal and an appraiser that won't answer phone calls, it's devastating for everyone involved: buyer, the seller, the mortgage people, everybody is just dumbfounded by something like that. And unfortunately, it happened quite often. Um, the demands in a refi purchase boom, 2020 obviously I think showed that. It took forever on appraisals, costs went up. We did what we had to do. The consistency across the appraisal process was always in question. Post closing conditions, folks would come back, investors would say, hey, we don't agree with your value, and it's like, we didn't have anything to do with the value. we we sent them a purchase contract and they did the rest of the work, but the lender has literally nothing to do with what the final value of a home is. And all of this I think stems from the appraiser shortage, which is a very interesting numbers. There's less than 30,000 appraisers in the United States. And at its peak, I think, you were probably somewhere in the 40,000, 45, 50,000. We were down under 30,000. Average age is 62. And I think for every 10 appraisers that we lose, we are gaining one new appraiser. It is not an attractive field to get into. It requires enormous education. It requires enormous dedication. 2 years in an internship, you're making, minimum wage, just basically doing all the work of an appraiser. And it's complicated. Barrier to entry is very complicated and it's expensive. So the shortage of appraisers is going to be very real, and any type of refinance pressure currently today, and we would see $1,000 appraisals with 2-week turn times. I just have no doubt it's a simple supply and demand function. We would have a ton of demand, and the pool of appraisers is shrinking on a daily basis. Next up. So your Fannie Mae, Freddie Mac waiver, inspection-based waiver, and appraisals, and kind of what the new options are going to be. I'm going to just stick with Fannie at this point. Freddie is the same thing. They just usually call it something different to confuse us all, and it keeps us on our toes so that we know which one's Fannie and which one's Freddie. But Fannie is going to stick with the appraisal, the PIW, the property inspection waiver, which is value acceptance. You'll see that, and the value is accepted. The other inspection-based waiver, which is what I want to talk about here today, is value acceptance plus property data. So the new hybrid appraisal is going to look something like this. Order is placed, an inspector, a qualified inspector, and not home inspector, but similar, more tech inspector certified, will come to the property. They'll have with them a smartphone that has software loaded on it to take basically what looks like a panoramic picture. So if any of you have fiddled with the panoramic setting on your camera, it's very similar to that. They go around the entire room, taking in the images of the room, of the floor, of the ceiling, of the interior, of the exterior, of the attic, of mechanical, of any plumbing, any electrical, anything and everything that's contained within the house. And all the while, all of these images are being uploaded into an artificial intelligence database that is reviewing all of the information and looking for analytics to make a determination on what type of tile you have, what type of wood flooring you have, what your cabinets are made out of, what your countertops are made out of, what color your paint is, what color your carpeting is, what type of carpeting. You name it, it's going to be in there. And I don't remember I want to say it's 40,000 images that these are 40,000 images are being processed. And the amount of information that's getting pulled from that is it's astounding. But Fannie, the GSEs, I think, are really trying to remove the opinion component from an appraiser. They want to get factual content with regard to what the value of the home is. So I really see the GSEs moving away from at what the actual value is, like here's your number, through to, yeah, this value is acceptable, because there's so many variables that exist with a purchase transaction. If it's a $510,000 sale price versus a $500,000 sale price, that 10 grand shouldn't matter. It's not going to be paramount to the success of the loan with a $10,000 variance. What should matter is that there's not a cracked foundation and the home is sliding into one side of the street. So all that being said, these hybrid appraisals are very quick. They're very easy. It's about 2 days. And the best part is they're less than $300. So we're seeing technology actually have a positive impact with regard to costs being down. As we saw with Link, which is not necessarily a tech upgrade, but more just dusting off something that has worked in the past. But between the title, the updated title and appraisal, you're talking about a $2,500 savings for that buyer, and it's substantial. That's definitely impactful, and it is going to separate us when consumers are shopping when our closing costs are much less than everyone else. Any questions on the hybrid appraisal?
There is one out there. Will the AI database be able to determine what the market will pay for the property?
Yes, 100%. And you'll have to forgive me, I should have brought ops in. We have all, as I'm sure you guys know, there's all kinds of different scoring models for confidence levels when it comes to an appraisal, when it comes to evaluation, automated or not. The new technology is basically taking in all of the different things that we've created separately and putting it into one bucket. So yes, you will have confidence ratings, you'll have scoring models that dictate that, yes, this is an acceptable property. More importantly, though, what I think Fannie is trying to do is give the originating entity the confidence up front that the value is accepted with property data or without property data. So, to me, Fannie is trying to do an excellent, they're trying to do the best work they can up front to say, yes, we agree with this value. But yes, all of your other components, anything that you see that had, scoring models, confidence models, it's all kind of rolled in there under a different name or, with a different set of parameters. Concept this year, MemberClose, hyper focused on reducing expenses. We want to make sure that we have the best set of parameters available at the least expense. We have to get some relief through to our members. It's been expensive for the last 3-4 years, and really trying to drive down costs. I think on these two large items is going to help drive costs down on every other front as well. So to me, being able to impact 1%, 1.5% of sale price is it's a huge benefit to the buyer, but it also really improves our name and reputation as credit union mortgage providers. That's really the name of the game. We want to get the best rates, we want to get the lowest costs, and we want to secure as much business as possible. So that's what our drive has been this year, and hopefully these two new products pass that along as far as what our goals are with MemberClose this year. So I'd like to say thank you for everyone's time this morning. Thank you for your attention, and look forward to any questions, be it now or after, sent through to Bryce or myself.
If anyone has any questions, we can keep the chat open for a few minutes. While you're thinking of any questions you may have, I want to thank Bryce and Bryant for joining us today, sharing the information about the changes to MemberClose, how AI can play into helping your credit union find cheaper alternatives to make those mortgages happen. If you have questions that come up later that you think of, Bryce's information is on the screen. If you don't remember that, please feel free to reach out to me and I can pass those questions along. Thank you both for your time today and your expertise and input. These sessions are recorded, so we will be sending the links out as soon as they have been edited and cleaned up. Thank you for joining today, and that is the end of our session. Thank you.
Thanks, Dean. Thank you for putting it together. Good to
No
see
problem.
Thanks, everybody.
Take care,
Appreciate it.
everyone.
Thanks.